Our colleague Varsha, who tracks the space pretty closely, has done a deep analysis in terms of what's driving this kind of investment surge and how hospitals are planning their next phase of growth. Varsha, over to you.
Well, thank you so much for that. You know, the next leg of growth for hospital will actually come from the capex that they will be doing, and not from the ARPOB growth. Let's see what are their capex plans in the last 3 years. If you see, so this table summarizes what capex they've done in the last 3 years versus what are the capacity expansion in the future. For example, Max Healthcare, if you see, has a huge capex in line. In the last 3 years, they've done almost 2,500 crores of capex versus 6,000 crores of capex is been lined up for the company, followed by Fortis Healthcare and Narayana Health. Now, for Narayana Health, if you see, they are actually tripling down the capex requirement that they will be doing. Moving on, if you see why we are seeing this increase in capex, is one of the reasons is growing demand for healthcare, especially post-pandemic era that we have seen. Also, there's been a huge bridge between demand and supply gap. So to bridge that gap, companies are actually widening their capacity expansion, which will help to bridge the demand supply gap. We have seen this increased demand of elective surgeries that has led to hospitals going for this huge capex, and of course growing medical tourism is one of the reason why all these companies are going for the capex free expansion. Now, the most important thing of this presentation is, are hospitals going for brownfield or greenfield capex? Now, the clear preference has been given to brownfield capex, meaning that they will be doing expansion, or they will be making addition to the existing capacities and not going for a newer one. Now, if I want to talk about Max Healthcare, 76% of the new bed addition that they are doing will be from brownfield expansion, huge growth there. For Fortis Healthcare, if you see, 85% of the bed expansion will be coming from brownfield capex. For Narayana Health, they will be doing a mix of greenfield and brownfield capex. But when it comes to Global Health and Apollo Hospital, the capex expansion will be done through greenfield capex. Now, why hospitals are actually going for brownfield versus greenfield, and why investors are betting on hospitals which are going for brownfield capex? The one reason is faster break-even and margin accretion will be seen in the brownfield capex, and there is a room for margin expansion when you go for brownfield capex, because greenfield units typically incur operating losses for 1 to 3 years, versus the break-even point for brownfield capex is very little. There's been low incremental cost required for brownfield capex, and hospitals can leverage their existing capacities to add on the capex. Now, moving on, this table provides what is the current bed capacity of hospitals versus how much they're going to add. So, for example, Max Healthcare, they're going to add almost 3,700 beds in the next 3 to 4 years. Fortis Healthcare will be adding almost 2,000 bed in next 3 to 4 years. If you see Global Health, current bed capacity for Global Health is almost 3,000 beds. They're going to double their capacity, rather their bed addition. This is one of the huge capex that they're doing, followed by Jupiter Life. Now, next on the list is, do current occupancy level justify the capex? So yes, because if you see the typical occupancy ratio for all the hospitals ranges from 65 to 75%, wherein Max Healthcare has a highest occupancy ratio of 75%, followed by Apollo, then you have Fortis and Narayana. So yes, all these hospitals are at the peak level of their occupancy ratio, and this is the reason why they are going for capex. And lastly, on the valuation side, if you see, all the companies are trading at a premium valuation, because investors are betting on these companies considering the growth prospects they have and the capex that they are doing.
Thank you, Varsha, for that. Don't you think this is interesting? Valuations are expensive, and exactly what we were talking about, for example, a Hitachi Energy as well. It's going to be interesting to see. In fact, we'll be doing a conversation with the analyst as well, of Prabhas Leela, at 12, to understand which could be one of the best picks from the hospital space to bet big on. If you have to, because you have to take a next 3 to 5 year bet, taking into consideration the capex cycle. is another 2 to 3 years away.
Yeah, most certainly. So something to watch for, to watch out for 12 as well. And now, before we get in the next management, quickly ask Varsha to do the setup for the conversation with Wockhardt. Varsha.
Yeah, so, you know, Neeraj, the best thing about Wockhardt is they are, if I were to talk about the Q4 numbers, the EBITDA growth is led by operational performance, excellent operational performance year on year. Now, Zenage is the next growth driver for the company, which is an antibiotic, a novel drug produced by Wockhardt. They have filed for approval in India in March 2025, and for US, they're planning by August 2025, and nephithromycin, again the other antibiotic, was approved and launched in May 27. Even their biosimilar business is on the cusp of growth, and insulin and gargling business has demonstrated remarkable growth, and that we are seeing in the revenue and EBITDA. So overall, if you see, Zenage is actually the next level of growth for the company. They've completed phase 3 trial, and it cured 89% of patients in the combined measure, and they plan to ask US and Europe to approve Zenage so that doctors can prescribe it.